how was your trip? Your trip to is it a month ago now?
I don't go back this weekend.
Wow. Since that time.
Well, no.
So what are the clients? What are they saying?
All
right. Okay.
Stanbic IBTC, moving forward.
Business trends beyond the headlines.
We had a substantial amount of capital available to invest.
Government policies, macro indices, market movement. Business Express on Smooth
Studio.
98.1.
Marks
In
are up.
association.
Interested in market trends and learning about business, or you're just an expert? Well, this is a show to listen to. Is Business Express 91 with Rotus. Good morning.
Good morning, Valentine. Good morning, Lagos. And they should teach this stuff in primary school. They should teach it everywhere. In fact, nursery school self.
I'll talk to the Senate about that. Joining us this morning to give detailed analysis, we have Ayomide. Good morning.
Good morning, Lagos.
Welcome.
Yes.
All right, Lagos, join the conversation. Ayomide is what?
Our lead economist at Stanbic. Yes, indeed.
Awesome.
It's going to be a good day. It's going to be a good day. But go ahead.
So Lagos, you can join the conversation by sending a message to WhatsApp. It's 0809-444-0981 or use the hashtag Business Express 91 on Twitter.
All right, thank you. I don't even like talking about the markets anymore. It's just so tepid. 0.18% yesterday, down to 41,080, 0.12 points. Market cap is at 14.8 trillion naira, 22 gainers, 27 losers. So far this year, we're still up by 7.4%. We are at 362 naira to the dollar. Ayomide, welcome. Good to have you in again. Excellent stuff. Let's start with PMI for April. What are we seeing from you guys?
Sure. So we have the Stanbic IBTC PMI, which printed at 58.1 points in April. That was slightly lower than 58.8 in March, which was the high for the last year and a half.
Okay.
But generally above 50, you're happy with the PMI. It suggests that the economy is starting to recover. Quite importantly, shows that output levels are rising. Prices have started to grow at a much slower pace. So that has a positive impact on inflation as well, which is why we think inflation for this year will close the around 10.5%, 11% from 13.3 that we have at the moment. So generally speaking, positive news. I was smiling when you were going through your rundown on the stock market. Hopefully it starts to filter through to the stock market pretty soon. But to be fair, last year the stock market performed extremely well.
Yes.
So maybe we're just going through a more relaxed
high base effect.
Exactly.
I'm going to get back to you on inflation. In fact, what that means for the next MPC meeting. But before we do, I need to get your thoughts on this headline on our foreign reserves, because I don't know what's going on. Lagos, I don't know how many of you saw this headline. I think it was in the Punch, Vanguard. Nigeria leads South Africa in foreign reserves. This is an actual headline. Here's the paragraph. Nigeria is leading South Africa in net foreign reserves, as Nigeria reserves hit 47.3 billion in March versus South Africa, which is at 43.1. Now, the central bank governor, Mr. Emefiele, he announced this new balance in the reserves at the opening of the 25th seminar for business editors and financial correspondents in Uyo. He was represented by their newly appointed deputy governor for corporate services, Mr. Edward Adamu. When did this thing become a competition? What's going on?
Well, with us in Nigeria, sometimes it's always a competition. Remember when we rebased GDP and became the larger than South Africa? So this is one of those headlines. First of all, it's not really net reserves at 47.4. That's gross reserves. There's an argument that the central bank still has swap lines, which is a couple of $billion forwards, which has gone through a couple of $1 billion as well. So my estimate is that net reserves are probably around 43, 42, which is still impressive. That covers 11-12 months of import cover. The question is, what have you been doing with the reserves?
Right.
Same thing, when you compare South Africa, you should compare like for like. We're 180 million people in Nigeria. So actually, reserves per head, it's per capita,
Right.
is lower than South Africa. Same thing with GDP. But these headlines are, it's better to have more reserves than not have reserves.
Less, right.
But also a filter through from the oil prices. Oil prices are around 76 at the moment, remaining there. But also portfolio investors. Since the introduction of the new investor and exporters windows, this time last year actually, we've seen at least $20 billion come through into the Nigerian FX market. The central bank has probably bought about $10 billion directly into reserves, and that props up this number. So if we go through a phase where oil prices decline to 40, or you have a risk-off event in emerging market or in the global market, emerging market, we could see this reserve number move lower,
coming down. All right, thank you. Interesting stuff. Okay, now back to what you were mentioning with regards to what is it now? Inflation coming down. Yeah, when you were talking about PMI and the environment. So there's this headline here: CBN to cut interest rates before year end. This is coming from one of these outfits, Focus Economics, who are just doing a report on the sub-Saharan area. Our next MPC meeting is the 21st. Yeah, 21st and 23rd of this month, in about 10 days or so. What are your thoughts? Are you seeing? I mean, they didn't nail it down exactly, but what do you see as far as the next meeting?
So if I could back up a bit, in our view, we actually think the central bank has eased monetary policy. In the last 2 years, the central bank hasn't actually changed the policy rate, which this article makes reference to. It's remained at 14%.
Right.
However, you've seen a drastic change in the effective monetary policy stance. What I mean by effective is treasury bill yields.
Okay.
The central bank has a much more effective way to adjust monetary policy through interest rates, mopping up liquidity, or we call it open market operation, to the extent that this time last year yields were about 20 to 22%.
Yes.
What that meant was that the risk-free rate for banks was there. You could just put in cash and you get 20% return, tax-free, and which meant that to lend to corporates, you have to build in a spread above that. And part of the reasons why the economy was so depressed last year. This time around, we are around 12 to 13%, which is a drastic change from last year, because the central bank has been less aggressive with liquidity management. So while on the surface in the papers it looks like the policy stance hasn't changed, but we've had actually huge swings in monetary policy. Coming to the meeting later this month, I think that it's possible that you get a cut in the policy rate. So we have a 200 basis point cut for the whole year. We think this year, in May, the central bank doesn't do anything. It allows inflation to continue to move lower. But certainly, I agree with the article that it's probably time to normalize the policy stance, especially if you're having inflation expectations at 11%.
Speaking of inflation expectations, there was the CBN, the new deputy governor of corporate service, Mr. Adamu Edward Lamtek. His last name, I always think it's a software update or a laptop, but Mr. Adamu Edward Lamtek, he says, if excess liquidity is allowed to build up, demand for foreign exchange could throw off the exchange rate. He was talking about the elections. He just gave out a warning as far as election spending. Is that something that you guys are worried about?
Yeah, it's always a concern. In the past, what we've had is that there's a lot of liquidity in the system, and then the central bank needs to come and mop that liquidity up. In fact, we think that there's a lot more liquidity now than there was probably a year ago. One of the reasons for that is central bank is actually buying dollars. That's a way of easing monetary policy as well. When they buy dollars from the market, they have to inject naira liquidity into the market. That's the first point. Second point is the fact that the debt management office is not issuing as much domestic debt anymore. So it's allowing a lot of debt to roll over and come into the market, which is why the rates have come lower as well. So my argument my counter argument to the deputy governor is we already have excess liquidity at the moment. The reason why we don't have pressure on the currency is because external factors favor us. So oil prices are at 76. If we see oil prices stay there through the election cycle, I think it won't be a problem. The problem comes when the oil prices come below 60 to 50 levels. Maybe it's not probable in the next 1 year, but if that crystallizes, that's probably when you should start getting concerned about the FX market. Actually, I think the currency should have appreciated from 360 at the INE window. The
Right.
reason why it hasn't is because the central bank has been buying dollars directly from the market.
Because see the insight we get on Business Express. You're not getting this anywhere else. Good stuff. Okay, well now, still on that, or rather, moving on to something else. Okay, yesterday we talked about the IMF warning Nigeria, or rather not warning, or advising, saying, hey, look, you guys need to broaden your tax base, and you also need to, you must mention the exchange rate just now. I said we need to have a singular exchange rate. Also, we didn't get to this yesterday, but they also, this is another headline. They warned Nigeria and other African peers of rising debts. That this is something that they need to be concerned about. Where are you at on the debt issue?
I listened yesterday morning.
Okay,
you can tell when there's a new IMF report. It's essentially the same challenge.
Right.
Arguably in sub-Saharan Africa, but in the world as well. This is a valid concern. Debt levels are rising. But there's some context to be put in. So in terms of Nigeria, for instance, in naira terms, the debt levels look over bloated if you compare on a 10-year basis. But remember, we've had a substantial depreciation in the currency.
Right.
So we are actually moving from more domestic debt to external debt. But because the currency has depreciated so much, it actually bloats the numbers out. That doesn't mean that we shouldn't be concerned. I'm not as concerned in Nigeria as some other sort of sub-Saharan African countries.
Right.
The key to debt, however, is what do you do with the debt? Do you borrow to pay salaries? Do you borrow to service your old debt? Or do you borrow to invest in infrastructure development? Many countries, especially in Francophone Africa, are moving towards private sector investment, moving away from government investment. So the ideal situation for an economy is you're ramping up on debt, you're getting growth following it, and then you get to a point where you slow down on debt, and then the economy becomes more attractive for private investment to come in. Unfortunately, it's not. It's varied in sub-Saharan Africa, and that's a concern.
All right. Okay, just by a couple minutes, I really want to get your thoughts on this. So the BOI, the Bank of Industry, says that they want to give core members, our NYSC folks, our youth there, up to 2 million naira in startup capital. They says it's loans. Okay, let me read it. Coordinator of the National Youth Service Corps in Osun State, Mr. Emmanuel Atta, said that the federal government has made plans for core members with good business ideas to get loans between 200,000 naira and 2 million to start their business ideas after the service year. Is the interest-free loans apparently, and the only collateral I'm showing here is their discharge certificates. So that's what
Why you smile?
Okay, because I don't know how
much
between 200,000 to 2 million naira. And okay, well, anyway, I want to get your thoughts, because I don't know about how this can work. But anyway.
So, I mean, it's not actually new. My view is help the youth, youth core members.
Okay.
Help, we are an entrepreneurial country. You need help. However, there are concerns around collateral. My view is if there's enough support, there's enough education, it helps.
Okay.
The problem may be you transition them from 200 to 2 million to maybe 10 million, and then you now ask for collateral, because the problem is, as a youth core member, what collateral do you have? Right. So I think the NYC discharge certificate is a step in the right direction. Hopefully we'll get more details around the proper framework, but I think it's a good step. It's not actually new. I was wondering why the state coordinator was mentioned. It's not really new. They do this kind of intervention. I think it's positive. It's just ensuring that there's enough transparency and letting us know what the process is. I think it should help the youth in Nigeria going forward.
All right, that's all to do. Valentine, Ayomide of StanbicIBTC, thank you so much for joining us today. Which I really appreciate it.
Fantastic show.
All right,
guys. Follow Rotus. There's Rotan Quotes.
Yes.
Twitter.
Send me all your questions and good stuff.
Exactly, and he'll reply you generously. Coming up next, Lagos at 7 o'clock. Frankly Speaking with Muyiwa Falabi. Stay here.
Headlines.
We had a substantial amount of capital.
Thank you.
World business news from a Nigerian perspective that
Hold
helps
on,
you stay
sorry for giving you
informed.
guys.
Business Express on Smooth 98.1 in association with StanbicIBTC every Thursday from 6:45 a.m.
StanbicIBTC, moving forward.
Started this journey all alone. Nobody showed you where to go. Everything you learned was on your own. Hoping that someday you will grow.
Really?
Really?